Trump. Look at the men on this stage. Collectively, they have lost 10 elections. The only people on this stage who have won every single election that they've been in are the women, Amy and me.
And just a disclaimer there that Michael Bloomberg, the founder and majority owner of Bloomberg LP, the parent company of Bloomberg News, is also a Democratic candidate. Global News 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sandra Kilhoff. This is Bloomberg Naira.
Sandra, thank you. Now with the morning sport, here's William Esler.
Tottenham are through to the fourth round of the FA Cup after a 2-1 victory over Middlesbrough. Argentine pair Giovanni Lo Celso and Eric Lamela got the goals for the home side in North London. Comparisons were immediately made to club legends and fellow Argentines Osvaldo Ardiles and Ricardo Villa. Watford's game at Tranmere was called off due to a waterlogged pitch. It'll now be played next Thursday. The winner of that tie plays the victors in tonight's game between Manchester United and Wolves. This evening's other tie sees Carlisle take on Cardiff. Elsewhere last night, Shrewsbury will play Liverpool in the next round after beating Bristol City 1-0. Coventry beat Bicester Rovers 3-0 to set up a home tie with Birmingham. Ironically, as they ground share, it means Birmingham will be the away side in their own stadium. Reading are also through after beating Blackpool 2-0. And Ireland's cricketers start their 2020 series against the West Indies this afternoon in St George's. It's the first of 3 matches in the series being played this week. Ireland lost all 3 of their one-day internationals with the Windies earlier this month.
William Esler there with all the latest sport. Now, let's go back to one of our top stories this morning. The US tariffs on China are staying put, at least for the moment. Bloomberg sources say the Trump administration isn't likely to remove existing levies until after November's presidential election. Any move to do so will be contingent on Beijing's compliance with the Phase 1 trade agreement, which that is, of course, going to be signed later today. Well, joining us to discuss all this is Bloomberg trade czar Brendan Murray. Brendan, thanks for being with us. Brendan, let me pick up on a question I think that's occurred to both Naira and I this morning, that what is it that the Chinese get out of signing this Phase 1 deal? Because they've come all this way, they're not even getting the tariffs lifted.
Right. I think what the Chinese got out of this was avoiding an escalation of it that the Trump administration had threatened to do back in December. But as our reporting shows overnight, these tariffs are in effect still on roughly 2/3 of Chinese imports into the U.S. So I think what this does is puts this whole thing in perspective. We're going to see a lot of applause and a lot of optimism at a White House ceremony today, attended by scores of Chinese officials and business people, all applauding this deal. Tomorrow we're all going to wake up and $370 billion worth of Chinese imports are going to have sizable tariffs on them. So I think what this does is put this in perspective. Phase 1, the compliance and enforcement of Phase 1 is not going to be over in a couple months. The U.S. is going to want to see quarters and, go upon quarters of Chinese compliance. And so, the discussion about whether they can comply with Phase 1, is something we're going to be looking at for, several quarters, if not a couple of years. Then we're talking about, trying to make some major changes in Phase 2. And, the headwinds from this trade war, have dissipated to some extent, but they're not gone away completely.
Yeah. And Brendan, I know you're fully aware of these numbers, but I simply want to remind our listeners, because even I sometimes lose track of exactly what the tariff rates are now. So after the first phase, the US is going to maintain 25% tariffs on $250 billion of Chinese imports, still the 7.5% levy on another $120 billion. China didn't commit to specific tariff reductions under the agreement, but it has vowed to exempt certain US products from its duties, and also it's committed to increasing purchases of American farm goods and making new commitments on intellectual property, forced technology transfer and currency. We're still waiting for the actual release of the 86-page document. What information is still going to be lacking in there? What will we know and what won't we?
The key things that we're going to be looking for are the enforcement, number one, of the currency commitments that China is going to make. What happens if China lets its currency slide, devalue over many months? Will the U.S. threaten to bring back tariffs, raise existing ones? That enforcement mechanism is going to be a key issue. Just exactly what China promises on intellectual property protection is also going to be everyone that this is the key concern of American businesses is that they every time they try to do business in China, someone copies their patents and they no longer can compete. So those are going to be some of the real issues where kind of the rubber meets the road for issues that will affect the economy going forward.
Brendan, so a lot of people looking at this, it looks like if this is a trade war, this is a kind of surrender, almost a surrender by the Chinese. Is there something the Chinese will be able to take away, go back home, because they do have a public, okay, it's not a democracy, they still have to look good coming out of this. Are they going to be saying, yes, the US has conceded on this, this and this?
Yeah, I think that they, they're going to look at their own economy and see that, things have kind of bottomed out. So the political sort of, pain, if there is any in China on a weakening economy, has kind of stabilized to some extent. So I think they can go back and they kind of looked Donald Trump in the face and said, okay, we can give a little here, but we're going to expect, some tariff relief down the road eventually, and they've kind of diffused the situation where, just remember 4 or 5 months ago, President Trump tweeted that, American companies should pull out of China completely, which was kind of a startling, directive from the commander in chief. So we've come a long way from, those, sort of, darker days of the trade war, to, the kind of celebratory mood today. But the mood has shifted a lot in this, and it could just as easily turn south again.
Yeah, and Brendan, the administration says there's no link, the US administration, between the timeline for tariff reductions and the November election. But realistically, in the run-up to the election, is President Trump going to be in a rush or not to get to phase 2?
That's a good question. The trade war, and we saw it in the debate among the Democrats last night. As a lot of people think Trump is going soft on China with this phase 1 deal. So it may well be in his political benefit, not only what he perceives as his economic benefit, to keep the pressure, the tariff pressure on, to bring it back if needed, and so it's something that could benefit him politically too.
All right, Brendan, thanks very much. That's Bloomberg Trade Czar Brendan Murray, and when we come back we're going to be talking about bank earnings, because it's been a very interesting moment. JP Morgan having the best year in US banking history. This is Bloomberg.
Hi everyone, Al Roker here. As a guy with his own catchphrase, I appreciate that after 75 years, Smokey's only said,
"Only you can prevent wildfires."
But I'm filling in because there's a lot more to report. Like when it's dry or windy. Be careful burning yard waste, because wildfires can even start in your neck of the woods. Go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
More than just a game, baseball is big business. For the Atlanta Braves, this meant bringing a $1 billion stadium project to life through a public-private partnership, creating the Battery, a mixed-use development that turned an underdeveloped area into a thriving community.
Always on the cutting edge of community development, Cohn Resnick advises industry participants on tax credits, affordable housing, opportunity zones, and more, helping communities reach their full potential. Explore more at cohnresnick.com/MLB. Cohn Resnick, Advisory Assurance Tax. Transform your game.
Rich is just a really, really, really good guy. The term good egg isn't enough to describe him. He's also certified organic and free range. Rich puts the cap back on everything. The toothpaste, the olive oil, the shampoo, everything. He lets his 10-year-old nephew beat him at virtual tennis, even though he can straight up slay his 10-year-old nephew in virtual tennis. When the toilet paper is running low, Rich replaces the roll on the actual holder, not just on the back of the toilet. Rich is texting and driving. Rich? No. What are you doing, Rich? I was just telling everyone how great you are. Texting and driving makes good people look bad. Visit StopTextStopWrecks.org. A public service announcement brought to you by the National Highway Traffic Safety Administration and the Ad Council.
This is not a cat. This is not a rocket. And this is not a sail. That's right. At Smarty Mobile, we're not having a sale. While others are slashing prices, we're introducing our best ever new plans. Take our new 30 gig data SIM for just £10 a month. With unlimited calls and texts and no speed restrictions, credit checks or contract tying you down, why shop around? New plans, great value. Now that's Smarty. Grab yours today. Search Smarty Mobile. See smarty.co.uk for terms.
Keys. Check. Phone. Check. 70s playlist downloaded. Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Got big plans for 2020? Capture and share every highlight on a gorgeous iPhone 11 with an ultra-wide camera. In Tesco Mobile's big January sale, you can get the latest iPhone for £40.75 a month with double data. That's a mighty 20 gigs. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Ends 26th of January. Was 10 gigs, now 20 gigs. 36-month credit and rolling monthly usage agreements with Tesco Mobile required. Subject to status phase. Policy applies. See tescomobile.com/terms.
You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Hand off Carruthers, big hole right side. He leaps and he surges in, touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Pascal gobbles up the rebound and slams it down.
Get your favorite NBA team right here on TuneIn.
A step back, deep three, it's up and in!
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Bayless. Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app and on QuickTake by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters in London, I'm Roger Hearing with this Bloomberg Radio Business Flash. And 3/4 of an hour into the European session, it has to be said that the main indicators are finding it very little room to find direction at the moment. Stuck 600 is flat, FTSE 100 up 0.1%. The CAC barely moved. The DAX the same. The IBEX down 0.1%. FTSE MIB down 0.3%. And looking to the US opening, S&P, Dow, both, well, not much movement. S&P down 0.1%, Dow down 0.1%. NASDAQ actually the same now. So very little sense of direction after what was a pretty down mood in the Asian area earlier. Keeping an eye on WTI, oil 58.04, that's down 0.3%. Brent crude $64.31 the barrel. barrel, also down 0.3%, retreating perhaps because of we come towards a 6-week low after a report indicating American crude stockpiles have increased. Another thing we're keeping an eye on is cable, because we're getting some lines now coming from Michael Saunders of the Bank of England, speaking in Bangor in Northern Ireland. He's very much in favour of a rate cut coming up at possibly by the end of January. He's saying that he's backed the cut to avoid an inflation undershoot. He said that growth is sluggish, unemployment likely to rise. He's talked about cable reversing its gains, dropping to 1.3004, which is where it is as I speak. Tuesday, it had a low of 1.295. So he's talking about that, and he sees a risk that the UK labour market could weaken. Those lines coming from Michael Saunders of the Bank of England. That's a Bloomberg Business Flash. Now here's Sandra Kilhoff with more on what's going on around the world. Sandra.
Good morning, Roger. Lebanese protesters are back on the streets denouncing the lack of a functioning government. Prime Minister Saad Hariri resigned in late October as moves to raise fees and taxes triggered massive anti-government protests. Now the country is slipping into economic crisis as lenders tighten restrictions on dollar withdrawals and transfers abroad. German Chancellor Angela Merkel is today meeting with the premiers of German coal mining states in a bid to hasten an exit from the dirtiest fossil fuel. The gathering is part of a flurry of climate activity after a landmark environmental package fell short with voters. The U.S. House is set to vote today on sending Trump's articles of impeachment to the Senate. House Speaker Nancy Pelosi will hold a news conference at 10 a.m. Washington time with more details. The next step is the president's trial in the Senate. And all 12 of this year's Lunar New Year blockbusters will be local Chinese productions. It's a challenge to Hollywood as China is set to overtake the U.S. this year as the world's largest movie market. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sandra Kilhoff. This is Bloomberg Naira.
Sandra, that's exciting. Any titles we should look out for?
I actually haven't seen what any of these movies are called, but what is very interesting about this is that a lot of people have seen a rise in nationalism in China over the trade war, and that is partly cited as the reason why all the 12 movies coming out over the Chinese New Year are in fact Chinese produced.
Fascinating. I wonder if any of them will come with subtitles. Thank you, Sandra Kilhoff with the World News. Now let's move on to US banking season. JP Morgan's record performance in fixed income surpassed analyst revenue estimates by a whopping $1 billion. This came as Citigroup's debt traders posted a jump more than double what analysts were predicting. Today, it's the turn of Goldman Sachs to report. Joining us in our London studio, Bloomberg opinion columnist Elisa Martinuzzi, who covers all things finance for us. Elisa, great to have you with us. So, of course, the positive side on this is fantastic trading revenue in FIC in particular, but you can't really predict trading revenue. So are gains like this expected to continue?
Well, this is a very good question. You've got questions obviously relating to market share. Was this just JP Morgan and Citigroup gaining market share of everybody else? And of course, these trading gains and blowout numbers were in the fixed income business. Less buoyant were the equity trading businesses, particularly at Citigroup, which saw a decline driven by the derivatives segment. So the potential read across to the likes of Goldman, for example, is a little bit more mixed. Having said that, I think the backdrop of a very buoyant consumer market in the US and the easing of trade tensions are all conducive to there being quite a strong quarter for activity in the fourth quarter.
But Elisa, we're going to see coming into 2020, this is a year in which there are lots of headwinds of various kinds. Are we going to see a similar pattern, do you think? I mean, looking forward throughout the year?
Well, I think what you've got, this year is, the decline in interest rates playing out into bank earnings more visibly into this year, as Citigroup reminded us of that yesterday. And I think overall you've got some of the geopolitical tensions that have been holding back, particularly deal making. Some of those easing. You've got a little bit more clarity on Brexit, potentially a deal with China, and all that should be conducive to more activity. But of course, the pressures on margins remain the same.
Yeah. The other question that I was asking myself as I read about what a great fourth quarter it was for trading is the comparables to the year previously obviously weren't very good at all if you think about the fourth quarter of 2018. As we sit here with having two of the big banks reporting and we're looking ahead to the rest, Elisa, who do you think is going to come out as the winners and losers of this earnings season?
Well, your point about the comparable period being particularly tough is a valid one. But if you look at JP Morgan, they had their best fourth quarter ever in their corporate and investment bank. So they're clearly coming out a winner. You've had some of the European banks pull out of certain pockets of business. You've had Deutsche Bank pulling out of equities. So it'll be interesting to see who's been able to to grab that market share, and equally the Europeans, whether they're able to maintain the business presence where they've in areas that they're keen to keep, the BNPs and the Soc Gens. I think it's a little bit too early to see who the winners are, but certainly JP Morgan is among them.
Okay, Elisa, thanks very much indeed. Elisa Martinuzzi of Bloomberg Opinion covers all things finance for us, bringing us up to speed with those banking earnings. We've got more to come later.
Yes, and luckily for us, Roger, joining us in the London studio now, we've got James Bevan, CCLA Investment Management CIO. I say lucky for us, James, because if my memory serves me correctly, you hold JP Morgan shares. You must be feeling pretty good after yesterday's results. Of course, one of the big questions that was put to the CFO, Pipshak, in the earnings call was, is this as good as it gets? She was optimistic about further growth, saying the last quarter wasn't as good as it gets. Do you agree?
I would say that JPM has scope for further progress, not just in terms of the fundamental earnings stream, where I think they run a very sassy book in terms of understanding the risks they are taking and being appropriately rewarded, but also efficiency gains for bedding down the acquisitions that they have made over years. And I suspect that many investors and analysts ignore the opportunity for the magnification of returns as that integration of prior purchases takes place.
James, why is it that the European banks are so much in the shadow? They're so not in the successful area that the US banks seem to be.
Well, the single biggest challenge for the European banks is, of course, negative interest rate policy. If one thinks about what happens with the Target 2 system, which is the clearing bank for the central banks in Europe, we have very roughly 400 billion euros being borrowed by Spain, roughly 500 billion by Italy, roughly 100 billion from France, and then about €1 trillion being lent in by the Germans. Now, so far so good, but of course the German central bank, the Bundesbank, doesn't have any money of its own, so it has to go to its commercial banks, say, hey guys, we need some money, and the money then has to be sent to the central bank. But of course, negative interest rates, a bill then follows. I mean, it really is outrageous when one thinks about what's happening. How is it that Deutsche Bank can ever make any money in a negative interest rate environment? The other challenge, I think, which is really huge for Europe, are very difficult demographic developments. When you have an aging population, which Germany has, you not untypically get higher savings rates, both for households and for companies. And now we're seeing it from the government as well. It's an economy which I think is going to underperform for a decade.
If we look to the broader market in the US, James, of course, the questions keep coming back. Has the melt-up gone too far? Has sentiment got too stretched? You look at record after record in the S&P 500, below the surface, banks underperforming technology, small caps underperforming mega caps. The mega caps have really led this rally. Does this tell you that it's a late cycle performance in the US equity market? And if so, how would you strategize around that below the surface of buying the index?
Well, when I look at the progress of equity markets writ large through calendar 2019, I would observe that all of the running was done by revaluation. So people simply pay a higher price to participate in the forward earnings story. That puts a huge onus on whether those earnings numbers are now going to come through. Now, I think that the street in aggregate is overly optimistic. The street's still looking for around 10 percentage points of corporate earnings growth this year. I think it will be roughly half that. I think, therefore, we can justify fair value for the S&P 500 for the end of the year to around 3,500 points. Not much more than that, based on what we know is going on in the economy at present. The only get-out-of-jail card that I can see in terms of driving the market sustainably and substantially past 3,500 points is if we get a big pickup in productivity. Of course, that's where the tech comes in.
And James, very briefly, we've been hearing from Michael Saunders, Bank of England, talking about the prospects of a rate cut. Are you expecting anything like that? I mean,
absolutely not, Roger. You asked me to be brief. I think the next move from the Bank of England is up, not down, and that is because I think that the Bank of England wants to take the window of opportunity that it has to replenish its capacity to cut rates when it really needs to.
commendably brief. Thank you very much indeed there. Thanks for doing that. That's James Bevan there, CCLA Investment Management CIO. And coming up in the next hour here on Daybreak Europe, Anna Edwards and Matt Miller will be taking over. They'll break Germany's fourth quarter GDP number, which is out in a few minutes. They're also speaking to Hugh Gimber, Global Market Strategist at JP Morgan Asset Management.
And meanwhile, markets still flat. The Stock 600 goes nowhere almost an hour into the equity market open. We saw risk off in Asian equities for the first session in 5. US futures also on the back foot after declines yesterday. This is Bloomberg.
Boredom, fitness enemy number one. So don't just run. Run, run, mix it up, skip, run, skip, run. Give yourself a lift, mix it up, lift, mix it up, run, lift, splash, skip, lift, run. It's crunch time. Skip, mix it up, run, mix it out of boxing class. Skip, run, splash, skip, run. Mix it up at Virgin Active and get stronger, fitter, faster. Join now for 12 months and pay nothing until March. T's and C's apply. Run, mix it up, skip, mix it, run. Mix it.
Keys, check. Phone, check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
This is Bloomberg Daybreak Europe.
What we're now seeing for the first time is this facade of absolute unity beginning to break down in the EU.
We expect that there will be some type of slowdown recession beyond 2019.
The European banking system, although recovering, hasn't recovered, and there are areas of fragility.
We've seen this before, trade talks that lead nowhere, and then tariffs. We just swing from one to the other, and markets get caught in the middle.
Bloomberg Daybreak Europe with Anna Edwards and Matt Miller on Bloomberg Radio.
Good morning from London. I'm Anna Edwards.
And good morning from Berlin. I'm Matt Miller. You're listening to Daybreak Europe on London DAB digital radio, or you could be listening on Sirius XM, really any number of ways. We're getting breaking news on German GDP right now, Anna, and it's bang in line with economists' estimates. GDP, not seasonally adjusted, year over year for 2019 was, well, the growth was 0.6%. That was exactly what a survey of economists carried out by Bloomberg was aiming for, and it compares to growth of 1.5% in 2018. So 2019 much slower, but it's the weakest, in fact, in 6 years. But it is at least a gain of 0.6%, and that's better than a stick in the eye.
Yeah, better than a stick in the eye. Weakest in 6 years, as you highlight, Matt. So what kind of impact is that having on markets? Well, we see the euro, it is as expected. So you wouldn't expect to see very much impact, I guess. But the euro is fairly flat, entirely flat, in fact, against the dollar. 111.29 is where we trade for the euro against the US dollar. Let's get a quick data check for you. We check the data every 15 minutes on Bloomberg Radio. The Stock 600 is almost entirely unchanged on European equity markets. The FTSE 100 has a slight upward bias, but not by much. The CAC 40 and the Xetra DAX a slight downward bias, but not by much again. And US futures actually pairing their losses as we've been through the last couple of hours of the European day. So US futures now down by between 1 and 0.2%. The Asian session was down 0.4%, and they were pretty broad-based losses across most of these Asian equity markets. A couple of negatives, if you like, in terms of the mood music around trade. One were these was the reporting that suggested that further tensions could escalate between between the US and Huawei, and also suggesting that phase one trade deal that won't include any rollback of some of the tariffs that are still in place, or at least some tariffs will be persistent beyond the phase one trade deal, which we kind of knew, but it was interesting that was given some time horizon by the US administration. So all of that added up to a negative session in Europe. Quick check on the oil price, down 0.5% on Brent at 64.15. The dollar is fairly flat this morning. Interesting lines coming out of Saunders at the Bank of England, not moving the pound all that much though. 130.16 is where we trade on cable.
All right, so we're getting a lot of numbers now about the German economy that are telling a really interesting story. So we gave you the GDP number, but we're seeing consumer spending was up 1.6%. Government spending was up 2.5%. Construction spending was up 3.8%. And then interesting, exports were much less than imports, which is fascinating for this export-oriented economy, right? Exports rose 0.9%. Imports rose 1.9%. For more, let's go to Frankfurt right now. Bloomberg economics reporter Piotr Skolimowski joins us. Piotr, what jumps out at you?
Hi, Matt. Indeed, interesting element of this release is definitely government spending for me. Obviously, after so much we've heard about how German government should spend more to help the economy, it seems actually the spending is up quite significantly. So that's one of the key drivers. Obviously, when you look at exports, it's pretty much as expected. They've been weak, and we've heard from the manufacturers for the whole year that they are suffering from trade war. They are suffering from the uncertainty about Brexit. And that's clear, very clear in the data. The problem right now is obviously where the economy goes from here. Bundesbank expects sort of a stabilization, so the growth of 0.6 this year as well, which is hardly positive in a sense that you're not expecting a clear recovery. Manufacturing seems to be stabilizing as well, but it's still a slump, really. I mean, there's no clear sign that we are having a sort of a recovery. There's still some kind of a contraction in production. And, you know, when you look at the data, manufacturing orders continue to decline. Car production, which is really, really big deal, fell to the lowest in almost a quarter recently. So it's under the hood, it's not really great. If you think about government spending, obviously I mentioned it jumped out at me that it's up so much. But as a matter of fact, if you look at the other number that was released today, budget surplus in Germany, 1.5, 6 year of surplus. Clearly, government has a lot of money to spend, and they could put that money into in the work.
Will they, though? The question is, will they, right? They have 12, I think I heard 12.5 billion was the projected surplus. So that's a fourth of what they want to invest in the Deutsche Bahn. It's a fifth of the climate package. What are the signs we're getting out of Berlin, Piotr? I ask you from Berlin, someone in Frankfurt, but what is the government? What's the government's position right now on the
right now? I mean, the position seems to be unchanged in the sense that unless we have a crisis, they're going to keep purse strings very tight. I mean, obviously there are spending plans, but don't expect a big headline number on a sudden stimulus package. Obviously, here and there are spending plans. So obviously there is this big climate package that's been a bit ridiculed in the press that it's not going far enough. But spending is here and there, and obviously they are going to spend. But in the bigger scheme of things, this is not. We're not going to see a big package unless, obviously, we suddenly see a situation where this slowdown that we've seen in manufacturing, this slump, is having a knock-on effect on demand. Consumers obviously have been a big supporters of this economy last year.
Indeed. We'll look for any developments in the unemployment picture. We spoke to Carsten Bresky of ING earlier on, who was talking about unemployment actually increasing 5 regional states, even if the overall number has been positive. So that part of the conversation, perhaps. Piotr, thank you very much. Bloomberg reporter Piotr Skilimowski joining us there with the latest on the German data. Let's go on the German theme to Hugh Gimber, global market strategist at JP Morgan Asset Management, who joins us in our London studio. Hugh, is Germany an investment theme for you right now? Clearly it faces a lot of headwinds, that data on GDP coming in as expected, in line with estimates, but this is an economy that's very set up. Its export orientation gives it difficulties, I suppose, certainly in 2019.
Completely. So if you look, for example, at the share of employment in Germany, you have about 20% of jobs coming from the manufacturing sector. That's double the extent of jobs in the US. And so when you think about this manufacturing slump that we've had throughout last year, not only has it been worse in Germany, but it's been much more important for the economy. So I think it's unsurprising that we see GDP still looking pretty uninspiring given the composition of the economy.
When you look at 2020, do you expect a turnaround in this picture? I mean, is there a possibility of a manufacturing comeback that would help Germany export more?
I mean, you're starting from a very low base, which is always a better place to begin. And so I think we could see some pickup. We've seen, if you really squint at the data over the last couple of months, you can start to find a few more shoots of optimism. But we were speaking earlier about the prospect for fiscal stimulus. And I agree with your colleague that the outlook there is not particularly optimistic at the moment. But I do think that that would be the catalyst that we would need to change the German economy round. And so whilst the government remain reluctant to spend, I think we're unlikely to see a big bounce back in German growth.
And of course, we're talking a lot about trade today as we expect to see the signing of the trade deal between the phase 1, at least, between the US and China. And this is part of a broader narrative, the sluggishness in German growth, part of a broader global story. Global growth in 2019 widely estimated to have been its worst since the recession that we saw a decade ago, Hugh. So are we going to see any uptick in that global growth story, or is that very much dependent on trade policy?
So the way we've been thinking about this recently is to compare an L-shaped recovery to a V-shaped recovery. And so when you look at the way that equity markets have moved over the past couple of months, I think you can really imply that probably the market is expecting more of a V-shaped recovery. I'm probably slightly more in the L-shaped recovery because I think although we're seeing progress on the trade issue, as you say...
Is an L a recovery shape?
Well, it's better than an I guess,
yes.
Where it keeps going down. But for me, there is still enough uncertainty to prevent businesses from being willing to come back and really spend. And so we now have a truce between the US and China, but not much more than that. We've had progress on the Brexit issue, which again is important for Germany, but there still remains quite significant uncertainty there. And so in this environment, I'm doubtful that business confidence is really going to surge and bring capex along with it. So that's the sort of the way that we're framing this problem. But I think the next couple of months will be really interesting to see how business sentiment reacts to the news that we've had, particularly in December around the Phase 1 deal.
All right. Thanks so much for joining us. Pleasure having you with us this morning, both on Bloomberg Television and on Bloomberg Radio as well. Hugh Gimber there from JP Morgan. Let's get the latest now in global news headlines. For that, we go to Sandra Kilhoff. And Sandra, you're starting with Vladimir Putin, who's actually giving a speech right now.
Yes, Matt, it is 20 years since the Russian president came to power, so there's lots of focus on this State of Union taking place as we speak. The president has been saying that Russia is passing through a very complicated demographic period, Putin adding that Russia needs to resolve social and economic issues faster. I will, of course, be keeping a closer eye on what he has to say in the coming hour as the State of the Union continues. Now, Bloomberg is reporting that Libyan strongman Khalifa Haftar snubbed peace talks this week after losing his patience with the Russian president. Bloomberg's Selkan Ajolo reports.
German Chancellor Angela Merkel said an international conference on Libya would go ahead on Sunday as planned. It is an effort aimed at preventing renewal of fighting and deepening foreign intervention in the oil-rich North African country after the collapse of ceasefire talks in Moscow earlier this week. Ankara, Selcan Acıoğlu, Bloomberg Daybreak Europe.
Europe is putting pressure on Iran to cease its violations of the landmark nuclear deal. France, Germany and the UK have triggered a dispute mechanism, with EU Foreign Policy Chief Joseph Borrell saying it will help preserve the deal.
A failure to preserve the deal will only add tensions in the region. Imagine for a second which would be the situation today had Iran nuclear weapons.
Experts warn a volcano in the Philippines could be about to erupt again and set off a tsunami from the lake in which it sits. Speaking this morning, President Rodrigo Duterte warned that there's no clear end in sight.
This crisis seems to be a continuing one. Whether it will grow into a big explosion or it will simmer down, we have yet to see what develops in the days to come.
And Irish Prime Minister Leo Varadkar has kicked off a general election campaign that puts Brexit front and centre. Bloomberg's Peter Flanagan reports.
Varadkar set the election for Saturday, February 8th, trumpeting his role in reaching a Brexit withdrawal agreement with the United Kingdom and the restoration of a devolved government in Northern Ireland. However, he faces challenges at home, with a homelessness crisis and struggling healthcare system. Bookmakers' odds make him an underdog in his bid to retain power. In Dublin, Peter Flanagan, Bloomberg Daybreak Europe.
Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sandra Kilhoff. This is Bloomberg. Anna.
Sandra, thank you very much. Still ahead on Bloomberg Daybreak Europe, BlackRock announced yesterday it's putting the climate emergency at the forefront of its investment strategy, but trillions of dollars of passive money remain unavailable for that fight. So writes our opinion columnist Mark Gilbert. We will dive into his thoughts on BlackRock and the future of ESG investing. Just how significant was this announcement this week? Mark Gilbert joins us next. This is Bloomberg.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Investors who put their money on the line to help build U.S. infrastructure deserve to be protected. That's what we do at BAM. Our unconditional guarantee means investors receive every payment of interest and principal when due, period. BAM-insured bonds have a high AA stable rating from S&P, and BAM credit profiles provide complete transparency on each and every transaction. BAM-insured bonds help build America's essential public projects. BAM, the feeling is mutual.
Open calendar. What's my schedule looking like?
Next Thursday, you will be caught in an emergency flash flood between Park and First Street.
What? No, that doesn't work. I'm busy then. Decline. Decline.
Floods don't exactly work around your schedule. Disasters don't plan ahead. But you can. It starts with talking to your loved ones about making an emergency plan. So don't wait. Communicate. Get started today at ready.gov/plan. Brought to you by FEMA and the Ad Council.
Influential conversations from Bloomberg Television. Here's Taylor Riggs.
Whether it be Huawei or Apple, there is no shortage of tech-related news that is shaping the industry. Among the big themes to emerge, customer data and privacy, antitrust, as well as U.S. trade. For more, I'm joined by Steve Case, AOL co-founder and current chairman and CEO of Revolution. Steve, it's great to have you. The first story that I wanted to get some of your thoughts on are about Apple and FBI. This is a little bit of a complicated story, as you know, a December 6th terror attack. Generally speaking, where do you see tech working with government officials, working with the FBI to help, but also be worried as well about protecting people's data?
I think you framed it perfectly as a balance between
individuals in society in terms of what technology enables, which is positive, obviously, in many different aspects of our lives, but also some of the risk. This was an issue 5 years ago, actually, with Apple also. There was a case with a problem in San Bernardino, and law enforcement wanted to open up the phone. That went back and forth. There's a new case now. This is a trend. We'll see more of these cases in the years to come as technology, and particularly the internet, becomes so embedded in everyday life and so fundamental that it's going to deal with a lot of issues in terms of what it enables on the positive side, and how do you make sure society is protected from bad things happening.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings.
Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app and on QuickTake by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters here in London, I'm Caroline Hepker with this Bloomberg Radio Business Flash. So US-China trade worries weigh on markets. White House tariffs may stay in place on Chinese imports until after November. So at the moment, European equities are flat to slightly lower on the US Stoxx 600. Asian equities ended the trading day lower. US equity futures right now down 0.1% on the S&P 500 E-minis. In terms of earnings, trading, of course, helped JP Morgan Chase post the best year for any US bank in history, and we get more earnings reports later from Goldman Sachs and Bank of America. Plus, the Trump administration is drafting rules allowing more sales to Huawei technologies to be blocked, so that's another big news line. As for the bond markets, German 10-year yields fall 2.5 basis points, currently at negative 19% in terms of basis points. Germany suffering its weakest growth in 6 years, so GDP rising an annual 0.6%. Also, the yield on 10-year treasuries is down 2 basis points at 1.79%. As for the FX space, the dollar this morning climbing just a fraction. The euro is little changed. Cable declines. The Bank of England's Michael Saunders, dovish we know, he says that the UK needs an aggressive response to the risks that are out there. The Swissy also climbing versus the euro again. DC added Switzerland to its currency watch list. And finally, oil retreats 0.5% right now on WTI crude, $57.91. That is a Bloomberg Business Flash. Now here's Sandra Kilhoff with more what's going on around the world. Morning.
Good morning, Caroline. President Trump's former National Security Advisor Michael Flynn intends to withdraw his guilty plea to lying to federal agents about his Russia contact. Flynn believes that the government lulled him into talking without a lawyer, and after investigators seemed to think he didn't intend to mislead, they prosecuted him anyway. 44 children and adults are getting medical treatment after an airliner dumped jet fuel near an elementary school in Los Angeles. Delta Airlines confirmed that one of its jets had dumped fuel to lower its weight ahead of an emergency landing. The U.S. aviation regulator is investigating the matter. Media executive James Murdoch is criticizing the coverage of Australia's bushfires by his family's news outlets. In a statement, he and his wife take issue with News Corp and Fox reports that have promoted the denial of climate change. And Japan's environment minister is set to be the country's first sitting cabinet member to take paternity leave. Shinjiro Koizumi is a public favorite to succeed Prime Minister Shinzo Abe and will take a total of 2 weeks paternity leave. Global news 24 hours a day on air and on QuickTake by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sandra Kilhoff. This is Bloomberg.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
It is 9:20 in the city. Time to check in with Bloomberg Opinion. We're joined by opinion columnist Mark Gilbert, who's writing about the problem with BlackRock's announcement that it plans to place sustainability at the center of its investment approach. Mark, surely this is on trend, and it's a $7 trillion behemoth. Isn't it good?
It's very good for the planet. It's fantastic news, but it's not being driven by altruism or any kind of tree hugging. Larry Fink, in his annual letter, says this is entirely driven by economics. It's driven by the client demands. But the problem is, of that $7 trillion that BlackRock oversees, is the biggest fund manager in the world, 2/3 of it is in index funds. And so that's not available to wield against the companies and the boards that are emitting the greenhouse gases that are putting the planet at risk, because the fees charged on those products are so low that the company can't afford to engage with boards and with company directors to implement this policy. And so it's not BlackRock's sole problem, but it's a problem for the passive management industry as a whole that it can't actually address these issues given the nature of those products.
Now, clearly, ESG, Mark, is still much smaller than ETF. So the amount of money behind funds that specialise in investing in this kind of green and other very conscious investing is still much smaller than the pile of money that wants to follow index funds. But is this the start of some kind of threat to the passive model if investors become increasingly demanding of money managers to actually be more active and less passive?
Well, there will be a question for investors in terms of, are they willing to pay higher fees so that their money can be put to better work in challenging boards, in engaging with companies that are deemed to be hurting the planet. And as you say, look, there's $20 billion in exchange traded funds that's related to ESG. That's out of a total of about $6 trillion globally. So it's a small subsector. But the issue will become more apparent as this rises up the agenda. BlackRock's move is a significant thing. It's the biggest fund manager in the world, and it's saying, look, the climate challenge is too big to ignore. But it will be investors who will have to pay a bit more in fees for their money to be able to be wielded in the fight against the climate action change.
So is this good then, Mark, not just for the Earth, but also for the industry?
It's
ESG trend?
It's certainly good for BlackRock. I mean, they're saying that they want to increase the amount they've got under management in socially responsible investing by tenfold in the next decade. And clearly those younger savers who are coming into the marketplace are more concerned about the planet than the older generation. And if you want to win their trust, you're going to have to offer products that cater for those sensibilities. And the industry as a whole, it's only been a couple of years since this became front and centre. And the movement's been rapid. The response has been admirable. And Europe has led the way. This is the first big US move. I'm quite optimistic.
Quite optimistic. I mean, what's BlackRock's, just briefly, Mark, what's BlackRock's record been so far then, in the bits of its portfolio that are active, where it can engage with business?
Its voting record has been a lot less admirable than its vocal intentions. It's issued papers on the environment in the past few years. Larry Fink's been vocal on the need for capitalism to be socially responsible. But in terms of actually voting on climate change issues at board meetings, the analysis shows its record is as poor as some of the other big US fund managers.
And
Mark, thanks very much.
That's set to change. I mean, that's part of the point, right?
That is the point. They will change. They will be putting more feet to the fire on this issue.
All right. I thank you as well. Mark Gilbert joining us there. Bloomberg opinion columnist. You can get his work and the work of his colleagues by typing OPIN GO on the Bloomberg terminal.
Thanks very much to Mark for joining us on that. Straight ahead on Bloomberg Daybreak Europe, we'll talk about trade. Big theme of the week, of course, while the US and China are set to sign the first phase of their trade deal today. It's looking like tensions between the two will remain high. The Trump administration is likely to keep tariffs in place until after the presidential election, although we heard from Treasury Secretary Mnuchin that this isn't to do with the timing of the election. It just gives time for enforcement to be ensured. We'll get more of that story next from Hong Kong. This is Bloomberg.
With a Bloomberg Business of Sports report, I'm Michael Barr. It's the latest sign that Americans are tuning into football again. The NFL's divisional playoff game between the Houston Texans and the Kansas City Chiefs drew 35.4 million viewers to CBS. That's up 21% from last year's matchup. It was the most watched AFC divisional playoff game in 4 years. The football used for the final play of Louisiana State University's win over Clemson in college football's national championship game is worth at least $100,000. That's according to Ken Golden, founder of Golden Auctions in New Jersey. Tigers quarterback and Heisman Trophy winner Joe Burrow threw 5 touchdown passes and ran for another, breaking several championship game records. And another bit of LSU trivia, the Tigers will get a $4 million payout. That's money to help cover the cost of the extra postseason games LSU played, and it is 100% tax-free. That's a Bloomberg Business of Sports report. I'm Michael Barr.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies?
Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
Why do so many Fortune 500 and Global 2000 companies count on GEP? Because GEP helps them optimize their procurement and supply chain operations, helping reduce expenses, boost EBITDA, and increase competitiveness. The results are nothing short of amazing. Strategy, software, managed services. GEP brings it all together. GEP, helping the world's best companies do better.
Why has J.D. Power ranked Commonwealth Financial Network #1 in independent advisor satisfaction among financial investment firms for the 6th straight time?
I spy with my little eye something beginning with B.
Bike.
Nope. Banana tree.
Oh, of course. We must have missed it.
Although you might not be able to see it, your small actions can have a real impact with Shell. Drive carbon neutral by filling up and using Shell Go Plus today. Make the change. Drive carbon neutral. Shell. Go well. See goplus.shell.com/CO2 for details.
Rainy January days in London are tough enough without a broken boiler. Keep your home warm and working this winter with 2 years interest-free credit and your boiler installed by one of our expert engineers. Plus, you'll get a 5-year British Gas warranty. And we can even quote by video call after work or on weekends. Get a quote by the 29th of February, and you can also get £200 off a new boiler, or £400 off for our existing home care customers. Search British Gas New Boiler. Conditions apply.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds, or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown.
Search NFL today.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Broadcasting live to London on DAB Digital Radio, to New York, Bloomberg 1130, to Washington DC, Bloomberg 99.1, to Boston, Bloomberg 106.1, to San Francisco, Bloomberg 960, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak Europe.
Good morning from the German capital of Berlin. I'm Matt Miller.
And I'm Anna Edwards. You're listening to Bloomberg Daybreak Europe. It is 9:30 here in London, 10:30 if you're in Berlin with Matt Miller. And European equity markets then, Matt, on the back foot just a little as we wait for a sort of set piece, I guess, and more detail around trade.
Yes, and we're getting more detail about the economic situation in the United Kingdom. The December inflation rate down to 1.3%. The forecast was for 1.5%. It's not getting quite as much inflation as had been expected. That could increase expectations
and the pound drops
for a rate cut. Exactly. Core inflation rate falling to 1.4% in December. The forecast was for 1.7%. So, it looks like you're not getting the kind of growth, at least in inflation in the UK, as markets had anticipated. You say the pound dropped. I'm looking at
the pound just dropping on that news. Yes, and just interesting in the context of the comments that we got earlier from Saunders at the Bank of England, saying that there was they needed to bring forward growth potential. The scope for more QE is limited by low gilt yields. And in fact, I was just looking for his comments on the UK economy. Yes, he said the surveys suggest little or no growth in the UK economy.
Yeah, so we're seeing not substantial moves in assets, but we are seeing moves in assets that are clearly on this. Gilts are down to 66 basis points and falling. The euro right now buys 85.66 pence. So I'm getting ever closer to my Sheffield Ducati there as the euro climbs against the pound. By the way, in terms of other market assets, we do see equity indexes a little bit mixed here in Europe. The DAX is down 0.1%. The FTSE is up 0.2%. Investors are buying the yen against the dollar, but it's still pretty weak. I mean, you can get 109.89 yen for your dollar right now. Investors are buying the 10-year treasuries in the U.S. right now. That pushes the yield down to 1.7899%. A euro goes for 111.31. By the way, very little changed against the dollar. And a barrel of Brent crude is going for 64.14.
Right, let's talk about one of the big events of the week, and that is the signing of the US-China trade deal. The US tariffs on China are staying put, though. Bloomberg sources say the Trump administration isn't likely to remove existing levies until after November's presidential election. In fact, we got confirmation of something along those lines from Treasury Secretary Mnuchin, didn't we, overnight? Any move to do so will be contingent on Beijing's compliance with the Phase 1 trade agreement, which will be signed later today. Joining us now from Hong Kong to discuss, Chief Asia Economics Correspondent Enda Curran. Enda, great to speak to you. I suppose this isn't an enormous surprise if we are going to see only phase one of a no doubt multi-phase trade deal, or perhaps multi-phase trade deal, being signed today. And what we heard from Treasury Secretary Mnuchin is you leave the tariffs in place until compliance is assured.
Yeah, I think this is one of the red lines for China. They had been pushing for the tariffs to be rolled back in as much as they could, and of course they settled for a fairly modest rollback in the end. But we know that going forward, China will certainly be looking for progress on the tariffs front. And interestingly, if you look at the state media, Chinese media has overall been somewhat quiet in the run-up to the trade deal. But today they were out and they were making the point that this trade war is not yet over. The Global Times sent a fairly cautionary note, and we had a very influential blog called Tower Notes come out the other day as well, making the point that this trade war has a long way to go yet. And I think it fits the idea that, okay, we're going to get this deal today on the merchandise goods side of things and some other measures around the currency and IP protection. But we all know going forward that there's much more complicated issues to resolve, and those seem to be the kind of issues that will dictate where the tariffs head.
And what exactly are we looking at in terms of tariffs? They're going to keep most or all tariffs on until after the November elections, but they're going to have them.
Well,
some of them.
I think the interesting aspect to think about is that the tariffs are being used as the enforcer of this trade agreement. So if we reach a point whereby, say, the US decides that China is ticking all the boxes on the trade agreement so far, and we'll get the details later, but we know broadly that it will be tens of billions of purchases of goods and services and keeping the currency stable and working on the IP side of things, well then China will be pushing hard for a case for those tariffs to be reversed as soon as possible. But we also know the flip side is true as well. There are plenty of economists who say that the scale of purchases being talked about is unrealistic. So if we reach a point where the US deems that China is not fulfilling its side of the bargain, well then those tariffs could actually increase. So I think the role that the tariffs play in enforcing and refereeing this trade agreement will be the critical one to watch for ahead of any phase 2 agreement.
Yeah, it seems to be the tool of choice for the Trump administration, doesn't it, on a number of fronts. What about the way that the yuan has moved? We've seen yuan appreciation recently, as if the Chinese don't want to do anything to upset the apple cart of this trade deal, or the soybean cart, perhaps we should call it. And what's your understanding of what's going on with the Chinese currency?
Well, there's no doubt the optics of the stable yuan and indeed the strengthening yuan, I think it hit a 6-month high this week, certainly comes at a good time for China, as you know, with the trade deal about to be signed. But I don't necessarily think that there's a broad view that China is using that as a political weapon that some trade hawks in Washington might think they are. It certainly is, of course, a managed currency, and they certainly do have the option of letting it cheapen at times to take pressure off their exporters. But I think the broad view among analysts is that they have been nudging towards letting the market have a greater say in it, even if it doesn't have the transparency that other currencies do have. And that, broadly speaking, it's been reflecting kind of dollar strength, dollar weakness, whipsawing in either direction. I think those are the bigger forces. And I think that's why we saw that currency manipulation tag being taken off this week too. There are those who say that was a concession by the US to China, but there are those who say really it was just a reversion to the reality, to realpolitik as well. That the debate around China manipulating its currency to help its exporters is a little bit dated at the moment.
All right, Enda, thanks very much. Enda Curran there out of Hong Kong, our chief Asia economics correspondent.
Now for the latest in global news, here's Bloomberg's Sandra Kilhoff, and you begin with some breaking news, Sandra.
Yes, good morning, Anna. We've just found out from Iran's official news agency that the British ambassador to Iran has left the country. He was declared persona non grata yesterday after participating in a vigil for passengers killed in the downing of a Ukrainian passenger jet last week. Now, this comes as France, Germany and the UK just yesterday triggered the Iranian nuclear accords dispute mechanism, citing Tehran's ongoing transgressions. But EU Foreign Policy Chief Joseph Borrell stresses that this is only to find a solution.
It's not a matter of putting sanctions. The objective of the dispute resolution mechanism will be find solutions and return to full compliance within the framework of this deal.
A volcano in the Philippines is close to erupting again, according to scientists. Bloomberg's Andrea Colonzo says more than 40,000 people have been evacuated so far.
The hazardous explosive eruption is possible within hours or days. The volcano has caused the ground in nearby towns to crack and tremors continue. President Rodrigo Duterte visited areas affected by the eruption on Tuesday, assuring evacuees of government help. In Manila, Andrea Colonzo, Bloomberg Daybreak Europe.
Today's practice for the Australian Open has been cancelled because of poor air quality and smoke from nearby bushfires. Tournament director Craig Tiley says 2 tennis players have received medical attention.
We have measuring devices on site on air quality. On top of that, we follow the independent advice of the medical experts, as well as the advice of the environmental specialists and scientists.
And the 7th debate for U.S. Democratic candidates has wrapped up without a clear lead as Elizabeth Warren, Bernie Sanders, Joe Biden and Pete Buttigieg remain front of the field. Warren made her case to lead the majority female party.
Can a woman beat Donald Trump? Look at the men on this stage. Collectively, they have lost 10 elections. The only people on this stage who have won every single election that they've been in are the women, Amy and me.
And just a disclaimer there that Michael Bloomberg, the founder and majority owner of Bloomberg LP, the parent company of Bloomberg News, is also a Democratic candidate. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sandra Kilhoff. This is Bloomberg. Matt.
Looks as if I will pick up. Sandra, thank you very much for the World News Update. And we will be talking about what's going on in FX markets shortly. We're going to be speaking on Bloomberg Daybreak Europe to Jeremy Stretch, CIBC head of G10 FX strategy. We'll get his take on the state of the German economy. As we broke earlier this hour, GDP figures show Germany's economy has suffered its weakest growth in some 6 years. That's not impacting too much on what's going on Eurodollar. We see the euro actually fairly flat against the US dollar, 111.33. We'll also get Jeremy's thoughts on the UK economy. We got CPI data that was inflation data weaker, fairly substantially weaker than was expected, and as a result the pound went lower, perhaps pushing up expectations for a rate cut at the end of this month, just around the time of Brexit. Interesting times. We'll talk about the UK next. This is Bloomberg.
Not completing high school is more of a social thing than it was an academic thing. Even though all these years have passed, I still had that longing to have my diploma.
At age 30, Carissa finished her high school diploma.
If you're even considering getting your high school diploma, you can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Inovalon is a leading provider of cloud-based platforms empowering data-driven healthcare. Leveraging deep connectivity, the data of billions of medical events, and advanced analytics, Inovalon empowers the achievement of improved clinical outcomes and financial performance for thousands of health insurance companies, hospitals, doctors, pharmacies, and pharmaceutical companies, and the millions of patients they serve every day. Inovalon. Data has a story to tell. We give it a voice. Learn more at Inovalon.com.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential and change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is boredom, fitness enemy number one. So don't just run. Run, run. Mix it up, skip, run, skip, run. Give yourself a lift. Mix it up, lift. Mix it up, run, lift, splash, skip, lift, run. It's crunch time. Skip, mix it up, run. Mix it out of boxing class. Skip, run, splash, skip, run. Mix it up at Virgin Active and get stronger, fitter, faster. Join now for 12 months and pay nothing until March. T's and C's apply. Run. Mix it up. Skip. Mix it. Run. Mix it.
This is not a cat. This is not a rocket. And this is not a sale. That's right. At Smarty Mobile, we're not having a sale. While others are slashing prices, we're introducing our best ever new plans. Take our new 30 gig data SIM for just £10 a month. With unlimited calls and texts and no speed restrictions, credit checks or contract tying you down, why shop around? New plans, great value. Now that's Smarty. Grab yours today. Search Smarty Mobile. See smarty.co.uk for terms.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night. And somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here. Testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Some ideas can be bad for business. Like a band recording a song underwater. No radio station would ever play that song. Or like Barclaycard, making a repayment calculator that shows how a small extra repayment each month adds up to paying them much less in interest. But Barclaycard have actually made their repayment calculator, so you should definitely use it. Take control. Start today. Barclaycard. Terms and conditions apply.
Here at Tesco, we're celebrating over 100 years of great value, with even more great prices that take you back. Like a 4-pack of Magnum Classic ice creams, now half price, from £3.20 to just £1.60, all this week at Tesco.
Selected larger stores subject to availability. Offer ends 27th of January.
At Ring, we've reinvented the doorbell. So no matter where you are, or what time of day, you can watch over your home and the things you care about. Ring Video Doorbell streams HD video and two-way talk straight to your phone, so you can speak to whoever's at your door from anywhere. Delivery.
Oh, great. Could you leave it with my neighbour, please?
Sure, no problem. And it's so simple, you can install it yourself in minutes.
See, hear and speak to whoever's at your door from wherever you are with Ring Video Doorbell. Available at ring.com and selected retailers.
Pascal gobbles up the rebound and slams it down. Catch your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app and on QuickTake by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters here in London, I'm Caroline Hepker with this Bloomberg Radio Business Flash. So right now, European equities are flat. FTSE 100, though, gains 0.25%. This after Asian equities ended the trading day lower. Worries about the US-China trade concerns continuing to weigh on markets. Basically, the White House tariffs may actually stay in place on Chinese imports until after November. So the tension's really not going away. US futures have been lower pretty much all morning looking ahead to the US Open. S&P 500 E-mini futures currently drop 0.1%. In terms of individual stocks that I've been watching, Moncler gains 2.5%. The luxury brand is named as an M&A target in a Bloomberg survey. 75 European firms actually on that list, topped by ITV. Have a look at the terminal for that story. And in terms of the bond market right now, German yields have been moving this morning. We're at negative 20 basis points, so down 3 basis points for German benchmark yields. UK gilts dropped 6 basis points. US yields trade at 1.79%, so also down 2 basis points this morning. Germany suffering its weakest growth in 6 years. GDP rose an annual 0.6%. And in the FX space, I'll give you a check of cable, which drops 0.2% at 1.2993. We had the weakest UK inflation in 3 years. So Bank of England rate cut potentially. The Bank of England's Michael Saunders would want that. He was speaking this morning about the UK needing an aggressive response to the risks. That is a Bloomberg Business Flash. Now here's Sandra Kilhoff with all the world news. Good morning.
Good morning, Caroline. Lebanese protesters are back on the streets denouncing the lack of a functioning government. Prime Minister Saad Hariri resigned in late October as moves to raise fees and taxes triggered massive anti-government protests. Now the country is slipping into economic crisis as lenders tighten restrictions on dollar withdrawals and transfers abroad. German Chancellor Angela Merkel is today meeting with the premiers of German coal mining states in a bid to hasten an exit from the dirtiest fossil fuel. The gathering is part of a flurry of climate activity after a landmark environmental package fell short with voters. The U.S. House is set to vote today on sending Trump's articles of impeachment to the Senate. House Speaker Nancy Pelosi will hold a news conference at 10 a.m. Washington time with more details. The next step is the president's trial in the Senate. And France is finalizing a bill to force streaming services like Netflix, Amazon, Apple and Disney to invest at least 25% of their revenue derived in the country to fund local productions. Global news 24 hours a day on air and on QuickTake by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sandra Kilhoff. This is Bloomberg. Anna.
Maybe they're fed up of watching the Queen. Perhaps that's the La Reine, maybe they call it, I suppose. France doing this because it's part of a broader cultural sovereignty in the digital era, I understand, Sandra.
Yes, it's a really big push that France is doing because they're worried about this influx of international streaming giants and what that will mean in order for the French language and for French culture in general. So they're really pushing for this. And so far, Netflix playing ball. They're opening new European headquarters in Paris as a result.
We will see whether this is catchy, whether other countries try to do the same with the incoming streamers. Right, let's talk about what's coming up in the next hour of programming. Our colleagues in the US are getting ready for Bloomberg Daybreak live from the US. Let's check in with Nathan Hager. Good morning, Nathan.
Good morning.
What lies in store, apart from the small matter of a big trade deal?
There is that.
So described by President Trump.
Yes, he does. Big, beautiful monster, I think, is the term he put for that trade deal that will be signed in mere hours at the White House in a lavish ceremony with the vice premier coming in to do the signing, but we still have signs of tension between the world's two largest economies, even with Phase 1 ink being put to paper. We'll bring in Christina Hooper of Invesco, get her outlook for markets as the U.S.-China trade story now heads into Phase 2 with lingering tariffs and industrial subsidies still on the table. We also have more bank earnings this morning. You know, J.P. Morgan and Citigroup knocked it out of the park in the fourth quarter. We'll see if Bank of America and Goldman Sachs keep up the momentum, with Bloomberg's Shanali Bossack previewing those results for us. And we will recap a contentious Democratic debate with Bloomberg's Tyler Pager in Iowa. And we'll have analysis from Brown University political science chair Wendy Schiller on the final debate before the caucuses in less than 3 weeks. All that, much more coming up with me and Karen Moscow. Hope you'll join us on Bloomberg Daybreak. Anna.
Thanks very much, Nathan. Nathan Hager up next then. Bloomberg Daybreak is up next, as Nathan says, or if you're listening on London DAB Digital Radio, you'll hear Bloomberg Surveillance. Let's get to some of our top European stories this morning. Back to Europe. Earlier this hour, we broke GDP figures out of Germany, where the economy expanded at its slowest pace in 6 years in 2019. And in the UK, inflation unexpectedly slowed to a 3-year low in December, clearing the path to a potential Bank of England interest rate cut a little bit later on this month, or perhaps more likely later on this year. Joining me now in the studio here in London, Jeremy Stretch, CIBC Head of G10 FX Strategy. Good morning to you, Jeremy.
Good morning.
Let's start with the UK story, shall we? Because that was quite interesting. We had these comments from Saunders, somebody at the Bank of England who's known to be quite dovish already, I guess. So we sort of we need to put that caveat on his comments, but they were quite dovish comments. And then we've also seen this inflation data coming in worse than expected, and so we see an adjustment in market expectations around what happens on January the 30th. Markets now pricing in 14.3 basis points cuts by the end of January. So that's, I don't know, not a full rate cut, is it, I suppose? But the market seems to be shifting its thinking.
It's not a full rate cut priced in yet, but clearly the direction of travel has been very much in that vein over the course of the last few sessions. So that has been impacting the valuation of sterling. I think the most important point to consider is, of course, that Mr. Saunders, as you correctly say, has voted for an immediate rate cut at the last two MPC meetings. So in a sense, his comments today are no great surprise. The weakness in CPI is quite unusual. I think there had been some concerns that there might have been an uptick rather than a retreat in inflation because of airfares and energy prices. But one suspects, and I haven't been able to look at the details as yet, that it may well have been the case that retailer discounting has been very aggressive into the Christmas period in order to try and facilitate sales volumes, and that's maybe causing some retreat in those inflationary pressures. I think, though, the market is doing its classic risk of getting ahead of itself in the context of the UK story, because I think all of the data prior to the election, I think, has been distorted by political risk and or Brexit uncertainty. And so I think we do need to put a very great degree of stress and focus on some of the data which is rather more forward-looking or post-election. And I think in that vein, next Friday's flash PMI on the 24th is going to be absolutely pivotal to how the market is pricing that January 30th meeting.
Yeah, because just to remind us, some of the data we're looking back at here is, as you say, backward-looking, and some of it, even if it's December data, will reflect the pre-election period and the post-election period, and things can look quite different, I suppose, from a consumer perspective and indeed from a corporate spending perspective.
Well, I think if we go back to earlier in the week when we had that November GDP print, now that was undoubtedly much weaker than expected, so it did cause a retreat both in terms of the annual and all the 3-month metrics, but of course that was November, so that was distorted by those particular variables. So I think we need to try and disentangle those two components. The Deloitte CFO survey, which came out, or the survey which was taken post the election, I should say, did reveal a significant uptick in expectations, and so I think that's something to keep in mind. Now, Mr. Saunders may have pointed out to the fact that in his opinion there hasn't been a significant rebound in sentiment post-election, but I think that's going to be the ultimate arbiter. Now, we've seen equity markets moving sharply higher since the election, and if we do see some signs of consumer activity and maybe a little bit of nascent rebound in that real estate market, then I think that is enough for the bank to stay its hand, because of course we shouldn't lose sight of the fact that on March the 11th we're going to get a budget which is probably going to see a fairly sizable fiscal
yes, and the Bank of England has to sort of be a price taker, doesn't it, on the fiscal side of things. You raised the question about what it was in the inflation numbers that that meant that this inflation figure came in weaker than expected. And I was just doing some digging on the Bloomberg as you were talking there, Jeremy. Downward pressure on inflation last month came from the cost of overnight hotel stays. That was one thing. Prices fell 7.5% there. But also, as you rightly point out, pressure from, or suspected, pressure from clothing and footwear, underlining the competition facing high street stores. So that was part of the story. Let me get your thoughts on the German economy as well, because the weakest pace of growth in some 6 years in 2019. How backward looking is that? How much has the market already discounted all of that? Because the euro didn't move.
I think the market has discounted all of that. And we know that the German economy is disproportionately impacted by trade tensions. So it has by far the highest tendency or preponderance of exports within its GDP component. So if you look at the trade headwinds, look at Brexit, it's unsurprising that Germany did see a substantial retreat. If you look at some of the forward-looking expectations components in the IFO or the ZEW, those look much more constructive, albeit from a low base, but much more constructive. And I think that is the message that I think we will continue to look at as the key one going forward, that if we can see this trade war or trade risks ease, if not totally de-escalate, then I think we can see a slightly more optimistic viewpoint for the euro, and I think we will see euro valuations stabilise but ultimately move higher through the course of the year.
And just briefly, Jeremy, are you in the camp that sees fiscal loosening from Germany or that suspects it won't come?
I suspect we will see a little bit of fiscal loosening, no doubt couched in green terms. I'm not sure necessarily we should hold our breath that fiscal easing is going to be the panacea to the German growth cycle, but I think it will help alongside the better trade environment to encourage better growth fortunes in the years ahead.
Okay, Jeremy, thanks very much.
Thanks
for joining us on Bloomberg Radio. Jeremy Stretch, CIBC head of G10 FX strategy, digesting the latest UK data, comments from policymakers and indeed the data out of Germany as well. Coming up in the next hour, Daybreak with Nathan Hager and Karen Moscow. We heard they'll be focused on the trade story quite a bit. Or if you're listening in London on DAB Digital Radio, you'll hear Bloomberg Surveillance with Tom Keane and Francine Lacroix. This is Bloomberg.
Boredom, fitness enemy number one. So don't just run. Mix it up, skip, run. Give yourself a lift, mix it up, lift, mix it up, run, lift, splash, skip, lift, run. It's crunch time, skip, mix it up, run, mix it out of boxing class, skip, run, splash, skip, run. Mix it up at Virgin Active and get stronger, fitter, faster. Join now for 12 months and pay nothing until March. T's and C's apply. Run, mix it up, skip, mix it, run.
Mix it. Keys, check. Phone, check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
Live from the Bloomberg Interactive Brokers Studios, this is Bloomberg Daybreak for Wednesday, January 15th, 2020. Coming up this hour.
Middle East policy and gender take center stage at the Democratic debate.
Signs of tension reemerge as the U.S. and China prepare to sign a Phase 1 trade deal.
Goldman Sachs and Bank of America report earnings after big beats from J.P. Morgan and Citigroup.
Democratic candidates spar over impeachment while House Speaker Pelosi prepares to send articles of impeachment to the Senate. I'm Michael Barr. More ahead.
I'm John Stashower in sports. A win for the Islanders, losses for the Knicks, Nets, and Devils, and Alex Cora, caught up in baseball's sign-stealing scandal, out as manager of the Red Sox.
That's all straight ahead on Bloomberg Daybreak. On Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 106.1 Boston, Bloomberg 960 San Francisco, Sirius XM 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
Good morning, I'm Karen Moscow.
And I'm Nathan Hager. Bloomberg Daybreak, brought to you by SEI. With a 50-year history of innovation, SEI's outsourced solutions help achieve lasting success for investment managers, asset owners, private banks, and independent advisors. Learn more at SEIC.com.
And futures are lower this morning, 5:01 on Wall Street, and we check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures down 4 points, Dow futures down 49, NASDAQ futures down 11, the DAX in Germany's down 0.1%. 10-year Treasury up 7/32, yield 1.78%, the yield on the 2-year 1.55%. NYMEX crude oil is down 0.4% or 25 cents at $57.98 a barrel. COMEX gold up 0.6% or $8.90 at $15.5350 an ounce. The euro 1.1126 against the dollar. The yen 109.87. Nathan.
Well, Karen, thank you. It is a big day for markets with the signing of a trade deal and bank earnings on the agenda. We'll have more on that in a moment. But first, Democratic presidential candidates sparred on the debate stage in Iowa last night. It was heard right here on Bloomberg Radio. The focus was largely on foreign policy in the Middle East.
We're now isolated. We're in a situation where our allies in Europe are making a comparison between the United States and Iran, saying both ought to stand down, making a moral equivalence. We have lost our standing in the region.
Joe Biden called his 2002 vote for war in Iraq a mistake. Bernie Sanders went after Biden on the issue.
We have spent trillions of dollars on that endless war. I did everything I could to prevent that war. Joe saw it differently.
Afghan war veteran Pete Buttigieg chose to focus on the future of U.S. foreign policy.
The next president is going to be confronted with national security challenges different in scope and in kind from anything we've seen before.
But the debate will likely be remembered for an exchange between Sanders and Elizabeth Warren over whether a woman can win the White House this November. Sanders denies reports he told Warren it couldn't be done.
Anybody knows me, knows that it's incomprehensible that I would think that a woman could not be president of the United States.
Elizabeth Warren pointed to the record when it comes to women winning elections.
Look at the men on this stage. Collectively, they have lost 10 elections. The only people on this stage who have won every single election that they've been in are the women.
Senator Amy Klobuchar and billionaire investor Tom Steyer also took part in last night's Iowa debate. The state's caucuses currently look like a four-way battle among Biden, Buttigieg, Sanders, and Warren.
And we'll have more on that debate throughout the morning on Bloomberg Radio. But first, it's a big day in Washington with the U.S. and China set to sign their Phase 1 trade agreement at 11:30 a.m. That is analysts turning attention to the prospects of a Phase 2 deal. Carla Hills is former U.S. trade representative and current CEO of Hills & Company International Consultants.
I think China does have the incentive to move forward and open up its economy. That's the way it's going to generate growth and deliver the kind of growth that is promised its population. I look forward to them meeting and trying to come up with the Phase 2 part of our negotiations.
Despite that optimism, Carla Hills thinks a Phase 2 agreement is unlikely before November.
Well, we're also learning U.S. tariffs on Chinese goods are likely to stay in place until after November's election. Sources say the White House will consider tariff cuts no sooner than 10 months after today's signing of the Phase 1 deal. Treasury Secretary Steven Mnuchin is pushing back against that report.
These tariffs will stay in place until there's a Phase 2. If the president gets a Phase 2 quickly, he'll consider releasing tariffs as part of Phase 2. If not, there won't be any tariff relief. So has nothing to do with the election or anything else.
Despite today's signing ceremony, trade tensions linger with news on China's Huawei technologies weighing on sentiment. According to Reuters, the Commerce Department is drafting a rule that would allow it to block more U.S. exports to Huawei. That rule could reportedly be issued in a matter of weeks.
Outside of trade, bank earnings are the other main focus for markets. Results from J.P. Morgan and Citigroup yesterday beat estimates. Today we hear from Goldman Sachs and Bank of America. Here with more is Bloomberg's Larry Kofsky.
Analysts surveyed by Bloomberg see a 14% rise in earnings per share at Goldman Sachs, with revenue up 6% versus a year earlier. For Bank of America, a less rosy forecast. Analysts are expecting a 3% decline in earnings and a 2% drop in revenue. Trading may be a bright spot, with the bank having reported a trading revenue increase of between 7 and 8% as of mid-December. Larry Kofsky, Bloomberg Daybreak.
Thanks, Larry. In other bank news, Morgan Stanley's paring back promotions. Sources tell us the firm is elevating 130 executives to managing director. That's the smallest wave of promotions to its top rank in 18 years. Both Morgan Stanley and Goldman Sachs have tightened entry into their highest levels in recent years.
On the economic front, the government issues the producer price index at 8:30 a.m. Wall Street time. Tomorrow we get a reading on retail sales, and how the government transmits data like that to news media could soon change dramatically. Bloomberg's John Tucker joins us live with the details. Good morning, John.
Karen, sources say the Trump administration plans to restrict the media's ability to prepare advanced stories on market-moving data. That could create a logjam in accessing figures such as the monthly jobs report. Currently, the Labor Department has a lockup. That's where journalists receive the data in a secure room, write stories on computers disconnected from the internet, and then transmit them when the connections are restored at the exact release time. Well, the shift could also spur an arms race among high-speed traders to get the numbers first. John Tucker, Bloomberg Daybreak.
All right, John, thanks. And a programming note, tune in today for a conversation with Robert Kaplan. The Dallas Fed president sits down for an exclusive interview with Bloomberg's Michael McKee. You can catch that conversation live on Bloomberg Radio and television at 10:30 a.m. Wall Street time. S&P futures lower by 4 points, Dow futures down 45, and NASDAQ futures down by 10 points. Straight ahead, the latest world and national news. This is Bloomberg. It's 5:07 on Wall Street. Let's bring in Michael Barr for a check of what's going on around the world. Good morning, Michael.
Good morning, Nathan. 6 Democratic presidential candidates wrapped up their final debate before primary voting begins, with talk of defeating President Donald Trump and bringing a divided nation back together. Former Vice President Joe Biden.
Character is on the ballot this time around. The American character is on the ballot.
Senator Bernie Sanders said this is the moment when we have got to think big, while Senator Elizabeth Warren says she has hope in America's future despite its challenges. Senator Amy Klobuchar says she'll be a president who finds common ground instead of scorched earth. Klobuchar also talked about the Democrats' push to have 4 witnesses at a Senate impeachment trial.
If our Republican colleagues won't allow those witnesses, they may as well give the president a crown and a scepter. They may as well make him king.
The debate was aired live on Bloomberg. Meanwhile, President Trump held a rally during the Democratic debate. The president told a crowd in Milwaukee a preliminary trade deal with Beijing will boost manufacturing and the export